What's up, y'all? It's a quick Q&A, mainly geared towards beginners, but whatever question you want to ask, I'm always open to it. I'll put everything in the chat if you got questions. If you have a topic and you don't just know exactly what question you want to ask, put a topic in the chat. I'll talk about the topic a little bit. And then if you generate a question from me talking about it that can make it more clear for you to get out what you're trying to get out, then of course I'll answer your questions. So when choosing a contract that has a longer expiration date on it, what are things you're looking for when choosing that contract? For me, when I'm choosing a contract that has a longer expiration, it really depends more so on what I'm looking at with the stock. All right. So if it's something that's like a day trade setup, all right, a breakout on, say, a 15-minute. If it's a 15-minute breakout, I'm not choosing, 3 weeks out. Right. If it's a 15-minute breakout, maybe if it's a Thursday and I'm kind of busy, maybe I get an extra week just so that I can have not be getting eaten up by theta decay if we start to range. Depends on the type of breakout it is. But other than that, when I'm looking for my 2 week out, 3 week out, 4 weeks out, I'm still gauging it based off of what I think the stock is going to do. And then I still like to get one strike out the money, no more than two. Again, I don't drill down into the specific Greeks for every single contract, but I still keep them in mind. So to keep my delta in mind, I don't like to go more strikes out the money than weeks I'm planning on holding the contract. So if it's a two week out expiration, I don't really want to go more than 2 weeks or two strikes out the money. If it's 4 weeks on expiration, I don't really want to go more than four strikes out the money on the contract. All right. So that's one of my rules to keep me in line as far as, delta. Of course, your theta is I'm just getting a further out expiration. But other than that, contract specifically, not too much I dive in there. And then on the actual stock itself, if it's a daily breakout, then I'm typically going to go and get an extra week. All right. If it's a weekly, I'm looking at getting maybe 2 weeks. I try to give myself room so that if it wants to consolidate, if it wants to move around, if it wants to pull back, that pullback or that consolidation isn't going to hurt me or force me to act, in a way that I don't want to, force me to be like, man, it's going down. Similar to Amazon trade, I called out Amazon. It had 2 weeks expiration on it, got a 92 call for 12.2. And people told me it went down. I wasn't even looking at it because I got time on it. And then it went up about 40%. As far as I remember its peak that I saw being 40%. But some people sold at a loss, treating it more of like a day trading contract versus a swing contract. So that's generally what I'm looking at, though, is the time frame that I'm trading, how long I'm expecting the move to take. And I like to get at least an extra week in most cases, so that if it does take the full length of time I'm anticipating it to take, I'm not getting hurt by it as much as if I got, 1 week, because I thought it would take 1 week and it took the full week. All right. What's my favorite strategy? That depends on whether I'm day trading, swing trading, scalping. But generally speaking, my go-to bread and butter is swing trading credit spreads based on seasonal patterns and technical analysis. That's my bread and butter. That's my most consistent thing. Even if you don't see me calling the trade in a Discord, trust I'm doing that, debit spreads and credit spreads. And then I'll do something else with it. But seasonality is my favorite way to look at trades. And then, of course, adding the technicals, because seasonality allows me to trade without having to look at the charts on a day-to-day basis and still be consistent. The Amazon trade, for example, is one that's pretty easy to understand. Amazon tends to go up from that Black Friday week's Monday to Cyber Monday. All right, so in this case, it'll be November 21st to November 28th. It typically goes up about, I think, 4% during that time period over the past like 15, 16 years. Right. And of course, we can understand logically, it makes sense that Amazon might see some bullish sentiment leading into Black Friday and Cyber Monday. All right. So adding on a credit spread or a debit spread to that allows me to be able to take advantage of that move without it having to happen immediately, like a regular, just call just to put, or a naked call, naked put, where you need to have a large move and have it happen fast. The spreads allow me to sell off another contract that'll allow me to take advantage of the time decay on that contract to drop the impact I feel from theta decay. All right. So that's my go-to. It's simple, it's easy, and it's consistent. Strap bullets continuations 212. So that's the inside day or inside bar, where you have a bar that might range from 95 to 93. And then you have a bar that ranges from 94.50 down to 93.50, right? That bar is inside of the previous bar. That candle is inside of the previous candle. And then you have another candle that goes from 93 up to 98, right? And so now that bar is now breaking out of that range, but it's not engulfing the previous candle. So whether you call it a strap bullets continuation 212, whether you call it inside candle breakout, which is how I learned it, and how I, still look at it. I like to use it on pretty much any time frame. Typically, when I'm trading it, it's going to be on a 1 hour and up time frame, maybe a 30-minute. But that's typically when I'm trading it. If I'm on a lower time frame, I like to look at the bullish continuations or just the 212 patterns in general, or inside bar patterns to either potentially exit a trade or stay in a trade. That happened to me today on Tesla, I think it was. I was in Tesla calls, it was going up, gave me an inside bar, and then it broke outside the inside bar, and I continued to stay in. All right. So most of the time I use those either to enter on a larger time frame, typically 1 hour and up, or stay in a trade longer by looking at continuation patterns and candlestick patterns on a smaller time frame when I'm day trading. But you can also use it if you're trying to stay in longer as well. You can still drop down different time frames, or go out different time frames and see, well, on this time frame it's still a 212 forming or it's breaking out on a 4 hour. So I don't need to be so scared about this 30-minute because the 4 hour is still forming a 212. Right. Finding good setups for swings. Go to recorded classes, go to the videos that we did. I did one on finding short-term swings, and Moody did a class on short-term swings. They're both about an hour-long class. Other than that, what I will say on here is just the same setups you look for on 5-minute, 13-minute, 20-minute, whatever. Apply the same thing. All right. A double bottom is a double bottom. Support is support, resistance is resistance, supply and demand are the same regardless of what time frame. So if trend line breaks work great on a 1 minute, you can apply a trend line break strategy to the 15 and apply trend line breaks to the daily as well. All right. Just keep in mind that you need to have contracts that adjust to that. If you're increasing your time frame, you want to also increase the amount of time on your contracts. All right. So I would suggest watching those two videos that we have in the recorded classes section of the Discord. But then generally speaking, apply the same stuff just to a bigger time frame. Other than that, I think that's really it for that one. Do I execute trades from TradingView or do I just look at it for charting? Just charting. I don't have a broker currently that's connected to TradingView, but I've been looking at that because then it kind of puts it all together. I don't know if I want that or not, though. I don't know if I want that. I've experienced it before when I did trade some Forex on MT4, and I don't know if I want to have my charting and trading in the same spot. So currently I do not. How do you go about stop losses in small accounts? I struggle with buying power, so getting stopped out is very likely with my small account. Getting stopped out is just a matter of you improving your entries and your sizing and your exits, right? Because you can have a small account, and if you are entering on, say, for example, you're entering on a let's say for example, in Bollinger Band, right? So if you're entering puts when it hits the top of a Bollinger Band versus you enter puts when it's already 3 candles down after it's bounced off the Bollinger Band, when you enter at the top, you're less likely to experience, more drawdown. Right. Usually when it hits the top, it pulls back down. If you hit the top of the Bollinger Band and you wait 3 candles, then it's already started making this move. And now it's possible that it will pull back on you. And that might stop you out depending on your stop loss. All right. So stop loss versus having a small account really doesn't matter that much. There's no I think. It also comes into your size. If you're trading, um, unless you trade versus if you're trading a 5 or in your account size, right? So even if you lose half of that position, you only lost 5% of your. You have more room with that where you can go 50% into drawdown on that trade, not be stopped out. If your stop loss is 50%, maybe it goes down 49, right? You're not freaking out because that's only 4.9% of your account. And then it flips back up and you can take your, if you take too much size, you're gonna be scared because you don't give yourself any room to stop loss at that point. All right. So if you have a smaller account, take smaller positions, right? That cost less money, and work on honing your entries. Work on looking for a tighter entry, the most precise entry you can. Drill down your time frames. Instead of entering on the 30, enter on the 5, enter on the 3. Right. And that way you're going to catch a more precise entry that will give you less likelihood for drawdown. Also look at your risk to reward when you're taking the trade. If you're looking at a bounce off of $100 support, if it goes to 99, that can be your stop. Right. But if you enter at 102, then your stop is still going to be 99, but it might drop back down from 102 to 100. And now you're in drawdown. And if you don't know how to manage a chart or manage a trade, then you might get scared and pull out because you're looking at your P&L, not the chart. So keep those things in mind. If SPY were to approach the weekly trend line resistance at $408, what are some confluences that you may see at that level? Also, what should we look for if it will reject, break, or do a false breakout of the resistance trend line? I feel like you kind of answered that. All right. You will look for it to reject or break or have a false breakout. All right. So I guess to put that into perspective, right, the rejection would be it tags the 408 trend line and then it bounces back off of it. The break would be, it goes above that trend line and it might go to 410, right? And then the false breakout would be it goes to 410 and then pulls back on weekly and ultimately closes at 406. Right. So in terms of what you might want to look at that level, again, it's going to depend on how long you plan on taking the trade. I prefer to wait for a break and a close over a trend line before I take the trade. In some instances, I'll wait on the retest, but I like to wait on the break and close because I'd rather wait on the break and close and give up a little bit of profit on waiting on the close above versus getting in. It's a false breakout. And then I got to wait. Then I get back in. Oh, it's a false breakout again. Get out. Then I got to wait and I get back in. I'd rather just wait on the break and close. But that's me personally. You have to look at your trading and see what style best suits you. All right. So some other things could be depending on how you look at indicators. You could also combine your indicators with it. So if you're looking at RSI, MACD, any of those things, you could also add those to, your trend line analysis and see if the indicators are also lining up. But for me, I just want to see how it closes off of that if I'm going to be trading it off the weekly. What's up, Friday Daddy? Good to see you. Could I show how I set key levels of support and resistance starting with the higher time frame and going down? Yeah, I don't mind doing that real quick. I don't mind doing that. Let's do it. All right. So let's go ahead and we could just pop over to SPY. Remove all this stuff off my chart. All right. So let's go ahead and start off with the month. And you might find a more detailed breakdown. We do have a class that was top-down analysis in the recorded section. But if I'm going to be breaking something down from the monthly down, which I guess because I teach so much, a lot of times my levels get taken off, and I don't just go reset monthly, daily, weekly levels. Because a lot of times I'm going to be using intraday. And so if I'm scalping intraday, I'm usually setting my levels based on that day. That's why I like to wait an hour into the market unless I'm trading a gap, because then I can come in and I can go ahead and establish levels that day, you know. But if we're going to work our way down from the top, there's two ways I like to look at it. That being looking at wicks and open and closes. So I like to look at everything and take into account where price is going, so I can also get a gauge of where I think price will go. So for me, what that usually will look like is, first of all, understanding that price bounces off of, sometimes it's a direct number, but most of the time it's not just one specific number that's a resistance, but you're looking at supply and demand areas where those orders get picked up. But how I usually do it, if I would go top down, is I would just start leveling off wicks and open and close levels on the monthly. Right now, I'm just using the horizontal line, which is going to be for a hotkey. It's an Option H on Macs. On PC, it's Alt H. If you come over here, horizontal line, and it should show you how to use it on your keyboard. But that's how I'll do it. And then you could just take it down. All right, so let's just go ahead and take it down to a weekly, and you can switch your colors. So that way you could have an idea of, this level was daily or this level was weekly. It was a monthly level. And that can give you a little more clarity into the significance of the level, because of course, the larger scale, the time frame, the more significant that price action. All right. So there's a couple, looks like a lot of them are kind of the same, which they should be, right? All right. And then you come down to your daily. I think after that, it really just depends on how deep you want to go, right? If you're going to be swing trading, then you're not looking at 15-minute levels, right? If you're going to be swing trading, you really just lay out your monthly, your weekly. You can lay out your daily, but after that, that's all you need, right? And generally speaking, I wouldn't say, like, if I'm going to trade off the 1 minute or the 3 minute, I'm not going through here and marking up monthly, weekly, daily, 4 hour, 2 hour, 1 hour. I'm not doing all that. I think it could help, but I'm not about to label off every single time frame on the way down. No, like I said, I like to just look at what's been established for that day. And then you still have some indication of what's going on as a whole when you zoom out. Because once you get used to it, you can zoom out and kind of see how it all lays out. But from there, let's say you go down to the 15. Now you kind of have, where you think price will go, right? So it came off of here, came to the yellow, went up, came back to the yellow, shot up, came back to this orange, shot up, hit this orange, double top this orange, came back down to test this as support, gapped up, held this orange for support here, dropped down, retested this orange again, came back up to retest this orange level. I think our orange was our weeklies. I think yellow was weekly, yellow was monthly, orange was weekly. Yeah. So now, right, came back, retested this one. And so this is how you could trade it. You just literally are like, okay, well, now it's probably going to come back down here. All right, we got down to this yellow. It should come back up to this green, hit this orange, rejected, came back up, right? Sucking this green. Okay, it bounced back through here. All right, set it back up to this orange, right? And for me, as I'm trading, on a smaller time frame, that's when I'll level off, you know, something like that. I'm like, okay, cool. Once we break out of this, right, break and close above this previous resistance here, right, rejection here. So a triple top, break and close above a triple top with this green candle here. Then I'm like, okay, cool. We should come take it up to the yellow. Sorry, right here. Take it up to the next orange. And now I'm looking at taking it back up to the yellow. Right, we shot up, pulled back, retested this as support, came back. All right, and now we're just kind of trading here. But typically when I'm looking at these, I'm marking them off as zones. Typically, but that's just because I kind of see both. I don't really need to just fully mark it all off all the time. So I already understand. Right, but that's kind of like muscle memory and practice and years of doing it with that. But that's how I would do a top down, breakdown on a SPY. That would be how I did. All right. Mind dabbling into credit and debit and credit spreads and how they work, especially with theta decay. So debit and credit spreads work where you're buying and selling the same option, not the same option. You're buying and selling the same side of an option, right? So we could be buying a out the money call, selling a in the money or at the money call, right? And when you do that, that'll create a credit spread for you. You're going to be collecting the premium from what you sold is going to exceed the debit what you paid for the other spread. Essentially, when you're looking at it, and it's easiest to look at an actual profit setup on it, an actual options profit profile, you could call it. But essentially, what you're shooting for when you're setting up your credit or debit spreads is creating a zone of profit or zone of max profit, because they are cap risk, cap reward trading setups or option setups. And so essentially what it will look like is, for example, with Forward, I did a debit spread. And the way I set my debit spread up on Forward essentially creates a room of profit for me. As long as I think the way I set mine up was as long as it finished above $14 on the December 2nd expiration, right? So as long as it finishes anywhere up here, I make the max profit, right? And that could be anywhere up here, any of this. All right, as long as on December 2nd, and this is the same way, basically your credit and debit spread will work once you actually lay them out. Anywhere up here is max profit. And then you have your strikes, right? So in between your strikes is kind of in the middle, but let's say I did a 14 strike and a 1350. All right, that's really wide. Let's say that's what I did. So then anywhere down here would be maximum loss taken on the trade. And it's not like it's a huge amount of loss, right? And then anything in the middle would range between, some loss up to break even, up to, some profit. And then you have your max profit when you're on the other side of the strikes. But that's why I like them, is because with debit spreads and credit spreads, you're not trading them the same way with regular, just buying a naked call or a naked put going long, a long put, long call, where you need the move to happen fast, right? And as far as when you bought it, you need to happen quick. And then you also need a huge move with a debit spread and credit spread. Again, this stock can go like this, right? It could go like this just the whole time, and then boop, and I'm still collecting the maximum profit possible on my trade, even if it consolidates for 4 days in a row. Doesn't matter, right? And that's why I'm talking about, because you're selling that other contract. All right. So because you're selling the contract, theta decay is going to benefit that contract while it's going to harm the other one. And that's the difference between the debit and the credit spread. Uh, so that's about as deep as I could go right here. I don't want to turn it into a credit and debit spread class that's super deep into that. Because it is something that takes a little more time to start getting the hang of and understanding. Are trailing stops best, or do you use do I move my stops manually? I do both. I like trailing stops because when I'm doing something during the day, if I'm playing basketball, if I'm almost sneeze, if I'm playing basketball, if I'm driving, if I'm, whatever, out doing stuff with people, then I can move a trailing stop and I can just get back to what's going on, right? Whether that's going to be a price-based stop in which I'll set an alert on TradingView, or if it's a percentage-based trailing stop, then I'll just move it up, check it, move it up, right? Manual stops can work if you're sitting in front of the computer. So when I'm sitting in front of the computer at my desk, just sitting there looking at it, then I will move my stop loss. I'll still trail it, but it's more manual because I'm sitting here looking at it. How I feel about Kroger, you're swinging it over the weekend. I think Kroger was good for the weekend swing. What is a rollover, and when should you do a rollover on the contract? So rolling a contract is taking a contract that you're already in, selling it, and then using premium from the contract that you sold to then purchase the next contract. All right. So example could be, for example, the Amazon call, right? Amazon swing, I called out 92 calls for 12-2 expiration. All right. Those went up 40% in profit. I could roll that contract because in the money, I can roll that contract and say, okay, I think Amazon's going to keep going up. But being in the money is going to slow down the potential of my gains if I think we're about to have a big day on Monday or Tuesday. So I could sell my contract that has a 40% profit right now, and I could take, say that the profit is $100, right? And the contract might cost $150. I could take $100 from the profit plus $50 from the initial, put it into this new contract, and then the rest of the money that I spent on my first contract, I could just put back in pocket. All right. And so I'm using that contract's premium to then go towards the next contract. When do you roll over in the contract? It depends, right? So if you think that your contract is going to continue to go up, but you want to be out the money or have a further closer to being out the money contract, you want to lessen the moneyness. I don't want to say it like that, but if you want to lessen the moneyness of your contract by going closer to at the money or further out the money, so that you have a potential to have a greater percentage return because you think the stock is going to make an explosive move, then you could roll that contract that might be in the money to one that's out the money. You could also roll over a contract if you are in a position and it's down due to consolidation. And so you're waiting on a breakout, it's going to break out, but it looks like it might not break out as soon as you expected. Then you can take that contract, cut it, move that money into a new contract. And then, of course, if you're down, you'll probably be adding a little more capital. But the whole process of rolling a contract is just going to be you taking that contract, selling it off, and moving into one that's of different expiration or a different strike. What up, TB? I see you, bro. Look like there's only one more question in here, though. What are the best strat indicators to go? I don't trade the strat. So I would say ask Moody that, ask BW that, ask Shay that. You can talk to Fry Daddy. I personally don't trade the strat specifically. The only thing that I trade that's close to the strat are PMGs or 212s, 312s. And those I traded pre me knowing about the strat. As far as 2-2s, Randy Jacksons, I don't know. I don't trade those. Any other questions? Appreciate y'all coming out. We'll give it another minute for any other questions that get dropped in the chat. Somebody said, please make this available later. Yeah, it's recording. I'm put it on YouTube. As soon as we close this down, I'm gonna let it download, put it on the tube. Any other questions? No class tonight. All right. Instead of coming to class tonight, use your discipline and use that class time to study something you know you need to be studying. Whether that's reviewing your trades from this week, whether that's, psychology, stop losses, whatever it is, use that time. Anthony, what's up, bro? Hopped on the mentorship. So the mentorship, we're moving the mentorship to January. It was a lot of people who wanted to do it in December, but said they needed some time, maybe for like holidays. So they were spending on the holidays, not spending on the mentorship. And that's okay. All right. So we move it to January. I'm going to DM everybody and email everybody who already signed up as far as how they want to do it. If they want to just do a refund and then repurchase, or if they want me to just hold their spot, it's still going to be limited spots because we're also going to be doing one-on-ones. So we're not doing, 50 one-on-ones. But yeah, we're going to move it to January, kind of have like a new year, new trader type of deal. What's up, Melina? What other questions we got? No, for sure, Anthony. I'm using the trail and stop right now on the questions. I keep setting a 1 minute timer after every question. The trail and timer stop. So 1 minute without a question, and then we're all wrapped up. What's a good stop loss from the calls from D? I shouldn't have told y'all that. I feel like somebody gonna set a timer. What's a good stop loss for the call outs from DD alert? Or from profit. You got to go look at their trades. I don't trade profits alerts. I don't trade DD's alerts. I think DD calls out stop losses with his trades. But I would say if you're trying to figure out a stop loss for an analyst, then I would say look at their previous trades and just look at how they moved. And if you want to create a stop loss based on that, you could do it. His is 40%. 40% stop loss is not a lot for a small account. I actually want you to unmute so we can talk about that. Are you in a spot where you can unmute, Melina? Where is the unmute button? Trip. Melina? Yeah, okay, cool. I'm about to let you unmute as soon as I find your name. I don't know why. Oh, there you go. You put my glasses on.
Oh no, great, thank you. No, I just was kind of scared because I know that there was like one call out, and sometimes the call outs go into negative, and I'm just like, oh my god, it goes down to negative 20, negative, like 25, and I'm like, no, let me just get out. And next thing you know, it becomes like a runner, and I'm like, god damn. But then I'm just like, I have a small account, and I'm like, I just can't risk it losing. But then I want to have like a winning trade just to get kind of that momentum, that trying to build the account a little bit. But that's what I was trying to ask, like, what's like a he has 40%. I feel like 40% is a lot because I remember in other sessions you mentioned, hey, if you can cut it out, sooner rather than later, you can make it up in a future trade with a better entry. So that's what I'm trying to figure out. Like, do I get out at 15, 20, and then okay, if it goes down lower, then maybe get in at a lower price and then let it ride out. That type of thing. Do you know what I mean?
I know what you mean. I think the best solution is to stick to the stop loss that he's given. Because it's going to vary, right? Think about this. If you have a swing trade and we're swinging it for, say, and this isn't what he's doing typically, but for the concepts, you can have a different perspective. If we're having a swing trade that we're going to swing for a month out, do you think that we could apply a 10% stop loss and have many trades that don't get triggered? She muted herself. Yeah, mute you.
Oh, sorry, I didn't want to talk. But no, so sometimes he'll do it like within 1 week out, or he'll do it the same week expiration.
Melina, answer my question.
If it's a month out,
it's a month 10%, out.
I think that's too. I think that's probably too short. 10%.
Right. Okay. So if we're taking the trade, second question to follow up that one. So that one you understand length of time on the trade, right? The second one is if you're taking a trade and you put on, I'm not saying this is what you're doing, but if you put your whole account on the trade, right, is 40% too much if you put your whole account on the trade?
I think so.
Right. Okay. Last one. If you only put 10% of your account on the trade, is 40 too much? Ah, you muted yourself again. I really appreciate you respecting not talking over me. I gotta keep.
No, sorry. I'm always like the mute unmute person because I don't want to be the one that just continues to keep it unmute, thinking I'm not gonna have a side conversation. So I apologize. Um, but no, I feel like even if it's a smaller 40%, I feel like 40% is a lot. I don't know. I have a really small account. That's the problem. Like I'm not doing 1,000, 2,000. I'm not doing that type of stuff. So sometimes if the trade's like 60, 70 bucks, I'm like, geez, I'm like, that's really gonna hurt me because it's like less money for the future. So I'm kind of like, but I don't know, I think I just have to build more confidence and just say, let it play out.
Yeah. So if it's a $60 trade, 40% stop loss would be taking you down to $36. You would be losing 36. So you have to just trade according to what you can. And if you know that DD's trades are usually 40% stop loss and they potentially could go down there, then you have to make sure that pre-taking the
Yeah.
trade, I can stomach a 40% drop on this. If you can't, then you shouldn't take the trade because he knows or should know, but I'm pretty sure he does know how much room he needs to give his trades. And for him, maybe once it's down 40%, they usually don't come back. 30%, they bounce back. Me, I know personally, usually once my trades go down 30%, usually they probably just gonna keep going down. But I'll have trades that they'll go down 30% and then shoot back up. And next thing you know, I'm in the chat, hey, we up 60%. Go ahead and lock it in. All right. But you have to keep in mind with your account size and the position size that you put on with that trade, can I handle that? Because what you don't want to do is try to adjust the stop loss that he set, knowing how he trades, right? Unless you're going to do your own analysis on the trade and you set your own stop loss, right? But you don't want to keep stopping out at 5% or 10%, and then it flips back up. Just like our swing scenario, right? If you have a swing, you can't have a 5% stop loss on your swing most of the time. You get one down day, you're down 5%. You're just gonna keep cutting -5, -5, -5, -5, -5, -5, -5. Right. So I would say if you can, grow the account to where that won't affect you, or try to trade and just be able to, only trade what you can handle going down 40% if you're taking one of his trades.
Okay, thank you.
Yeah, sure. All right. We're pushing on 6 o'clock. What other questions we got? Genworth. What about Genworth, bro?
It was one of the free stocks I had got. I got my first little dividend from it. It wasn't up but a little bit of change. But I still gotta learn, you know what I'm saying, exactly how to read my deltas and my gammas and stuff. So I was just wondering what you think about Genworth, you know what I'm saying, financial incorporated little company.
Oh, fundamentally?
Yeah,
Ah,
just just a simple insight on it.
I I've never looked at them. I could do a quick little thing, but I ain't never looked at them for real.
I don't even know if they like how long they been out of none of that, or how far much have they been in company. like I was telling you last night, I'm just now actually starting to get into the stock, and I've been on this is something I'm supposed to been doing. So this is where my journey started with Gen work.
We can look at it real quick after this Google chart. Somebody else too. For Google on the weekly, let me take to the monthly real quick. You said you wanted to swing Google. That's a solid bounce. Monthly. That's a solid bounce off of this previous level that we were rejecting. That's a solid monthly bounce on the weekly. The thing I'm just looking at is this continued lower high, lower high, lower high, lower high, right? That's how you form that trend line to see if we're going to continue back down or not and just come back down to test this level. So I will wait really on the break. I would like to see at least breaking this high, preferably close above it. But, you know, if you want to take an early trigger, then we take out 115. And that could possibly carry you on up. Let's look at Genworth. All right, Genworth. Take it from the month. All right, so it used to be popping for a minute when the IPO came down here, double top there. Got that. Got that. I don't even think we need to take it below this. Oh, so right now it looks actually the best it's looked in a minute. We just don't want to see this repeat right here. All right, you had to move up inside candle, break above, and then shot back down, continue back down. This is the monthly chart, right? So all these candles are months. But right now it is looking like it's potentially about to break out this range. I would want to see, even on like buying the share side, I would still want to see it get above these little highs over here. These little highs right here. I want to see it actually get above those. I really want to get a close. And then we can look at, you know, the continuation back up towards that $9 area. All right. But all in all, the past since since 2016, let me just do it like this. This will make it easy. Since 2016, it ain't broke above 526. Right. And right now it's at 491. So if I was to buy it today, I know you didn't buy it today, but if I was to buy it today, my room to retest 526 or 527 rather gives me about a 7% move. My room to come back, if it does drop back to test this previous level it was bouncing off of, that's a 30% move back down. Right. So you mean you could tighten up your stop. But just keep in mind it has the potential to continue, you know, hitting this little top level, dropping back down, right? Hitting that top, dropping back down, hitting this top, dropping back down. I'm gonna let you unmute again. TV, let me know if that's making sense, bro.
Oh, it makes a lot of sense, especially from what I see, what I seen. 'Cause I seen when it last went up, it was around when it did its dividend, or well, its earnings. The last earnings, that was when it went up, and it's been coming down ever since after the last earning. It don't do good on earnings or nothing like that, but it's just a good beginner stock for people on Webull.
Well, they increased their profit by a lot compared to 2020 and 2021. Quarterly, they've been dropping. Their profit margin has been dropping pretty much all past 5 quarters. They've been taking on more debt. They're taking on more debt quarterly. Profit margin been dropping. Their year-over-year growth has been decreasing quarterly, as well as their liabilities. Total equity, yeah. There's probably stronger choices out there. Say that, put it that way. So we're looking right now, I mean, annually looking at their, their assets, right? Annually, it's kind of just bouncing up and down. And in 2021, they dropped 7%, right? Minus 5% in 2015, -3 in 2016, +1 in 2017, -4. So not to say it's bad, but with their financials not just looking beautiful, and then factor in right now buying here, right? What you would have wanted to do was buy, after this bounce at this little double bottom area. Right now, we're hitting the peak. Right. So you don't want to be buying here unless we can actually break above this previous high. But your risk of pulling back down here versus, your target, your first target being here, it's a lot worse than if you bought it down here, right? Then you're like, okay, cool. I'm trying to take it back up to 527. If it dropped back down, right, I can make 46% versus lose 5, versus now I can grab about 7%. You wouldn't hold it, hopefully, for -30, but I got it wrong. Do I think we'll do another small account challenge, 500 or 1K? No, I wouldn't recommend buying a year out on puts necessarily. Yeah, we're probably gonna do another account challenge. I'm working on something that's not an account challenge. I'm trying to set something up that's a step-by-step system that you can follow and scale your account with. I'm doing something privately right now, and then I'm gonna take this very, very, very small group of people, like 2, and then we're gonna test it out and then refine it, and then take like a very small group of people, like 5, to test out. And then it's gonna take about 6 months. But that's what I'm working on. What's your suggestion, Melena?
So I have a suggestion, right? So instead of maybe, I know everyone wants to like do a small account challenge so they can kind of like try to build their account, which they can probably do with the DD alerts and those other ones. But I feel like maybe it's more of an education of how to analyze companies and what's a sound company versus a non-sound company. If people are starting to think about long-term, investing, what should they be looking for? Kind of just looking at just kind of more of the financial aspect of it, kind of some of the stuff that you've kind of learned in your MBA. So just kind of giving people more, getting that financial acumen up to date, I think would probably be helpful or beneficial for the team, as opposed to like, okay, quick hits, tell me what to do, and you give me a call, I take it, and then boom, I do it. But it's like, how could you do it on your own while analyzing the company, while doing some of the other additional research, in my opinion.
So just more teaching as far as fundamentals as well. Is that what you're saying?
Yeah, like one of the things that you're supposed to look at a company is the cash flow. How strong is their cash flow from operations, right? You know what I mean? Like, do you know what you're getting into? Why are you getting into it? Are you just trying to get a quick hit? Those some of those things. Because sometimes it's like, okay, someone said it always moves, so I'm just gonna do it, but they don't know anything behind the company. You know what I mean? So I don't know, because it'll help with your long-term strategy as well.
Yeah, I think now is a good time to possibly introduce some more fundamental analysis breakdowns. Um, I'm open to that. I mean, the reality of it is, I'm gonna leave it recorded. Um, the reality of it is, for those who want it, yeah, we can do that. I think the majority of people, unfortunately, are just like, just tell me what to buy, right? Instead of wanting to learn exactly what they need. So we can do it. We can do it. I'm not opposed to it. Because it does make sense, especially right now with the market being in this position. If we could do that, we've done it. It's only been like 19 people on the class, but yeah, it's a whole shift, Melena. That's the other thing is I'm trying to plan out how to shift, the way of thinking. Because the reality of it is, until every individual changes their way of viewing the market, they're not gonna get where they want to get. Um, until you get out of, I got $200 and I want to take it up to 1 million this year and retire, and that's it, you're not gonna get anywhere. If that's all your brain is processing and not, okay, what's the best strategy for me to build this $200 to 500, safely? Okay, well, what about from five? Okay, so should I start implementing, how do I, calculate risk, and the VIX is here. Should I make some adjustment, or how do I get into that? What are the steps? Like, everybody want to go from starting point to destination without no damn steps, without no process, without no journey. Oh, and so somehow shifting, these things. Um, even a better example is having rules for your trading. And I've been talking to some people the past like 4 weeks, and they'll say, when I follow my rules, I make money. When I don't follow my rules, I lose money. But then, like every other day, they like, I didn't follow my rules again. And until we can make some sort of switch in your head to where you stop like moving off of emotion and trying to feel good, but just stick to what works. Yeah, we in a tight spot. So, not to sound like down or whatever, but I'm just accepting more and more that like, Bumblebee and HPAT and Gigi and Kasia and Shakiri, Bless 13, Anthony, Charm, whoever, like, you gotta flip mentally. And we teach, we didn't taught fundamentals. We've had a fundamentals class. We teach strategies. We done taught all this stuff, the same stuff I just showed y'all, top down analysis. We taught that already, right? But until you flip in your head that I'm not going from starting point to destination like that, right? Or I'm not going from having a bunch of puzzle pieces to a finished puzzle just by putting one piece down, it ain't gonna get it. Like, we gotta look at the fact that this whole thing is a puzzle, and you have to take that risk management puzzle and connect it to the account management, and connect it to the sizing, and connect the stop loss puzzle piece, connect the take profit puzzle piece, connect the volatility, connect the grease, connect this, connect that, right? And then you have this full thing where now you're doing it. But if you think that you could just hop in the NBA today and start playing at a pro level, you can't. If you think you can hop in trading 2 months ago and start trading for a living, you can't. Right? So I'm working on something for that. I'm always working on. That's all I'm working on. That's why you see I ain't calling out a lot of stuff. It's because I'm trying to set something up that can truly take people. The mindset is the hardest thing, because it's really hard to change somebody who's a 35-year-old grown person's mind, right? Just by talking to them, right? It's the hardest part. But I'm trying to create something that can work on the mindset and the approach. Take that, take the principles, simple strategies, simple principles, no guesswork. If the stock does this, we do that. Simple input, output. And create a process for that where, you just follow it. And if you have, if you want to do another account where you still have your fund, you do that. But let's not lose focus of what we trading for, right? We trading to make money. So if you're trading to make money and you understand that doing X makes money and doing Y loses money, why are we doing Y, right? And until we can get out of doing Y, you ain't gonna get to the end goal, right? So it's 6:10. We've been on here for an hour. I'm gonna go ahead and close it down. If y'all got anything else, y'all could DM me. I'm gonna DM some of y'all. I gotta go through my DMs. Again, no class tonight. Take the time to be disciplined. The time you would have been spending on class. Study what you need to study. Study yourself. Study your trades from this week. Study other people's trades from this week. Watch 3 YouTube videos on options Greeks. 3 videos on scalping. 3 videos on swing trading. Whatever it is you need to get better at. If you want to learn about credit spreads, 3 videos on credit and debit spreads. All right. Or vertical spreads is another word, another term. Google, YouTube, ways to get better with risk management, trading options. All right. But I think the biggest thing is taking into account yourself and figuring out how you can be more disciplined yourself and do better with yourself because you know what to do. Right. And knowing all the strategies in the world is not going to help you if you don't actually execute or have the discipline to stick to it. All right. Peace and love, blessings. Be safe. I'm out.